Hello everyone, welcome back to my YouTube channel. In today's class, we will learn about additions or extension to the existing asset and how they are treated in accounting. Clear? So this is an important part of fixed asset accounting and will help you understand when to capitalize and when to expense an amount. Clear? So let's see. See, sometimes what happens means after purchasing a fixed asset, a business may spend more money on it. Right? Sometimes after purchasing a fixed asset, a business may spend more money on it. So this extra spending on fixed asset can be of two types. They are addition or extension, and second one is repairs or maintenance. Repairs or maintenance. Clear? So let's discuss about addition or extensions. It means what? It is nothing but spending money in such a way that the asset can do more than it could earlier, not just keeping it in the same condition. Clear? That is what addition or extension means, spending money in such a way that the asset can do more than it could earlier, not just keeping it in the same condition. It means increasing the asset's capacity, size or usefulness. It means increasing the asset's capacity, size or usefulness. Means if we spend more money on the existing fixed asset, the asset's production capacity becomes more, size and usefulness becomes more. That is what addition or extension. See, increasing the asset's capacity means what here? It means making the asset able to produce or serve more than before. For example, adding an extra unit to a machine. Adding an extra unit to the machine so that what happens? It produces, for example, 200 units per hour instead of 150 units. Clear? Adding an extra unit to the machine so that it produces 200 units per hour instead of 150 units. That is what? Increasing the asset's capacity. And increasing the size. It means what? Means physically enlarging or extending the asset. Means, for example, adding an extra floor to a building means physically enlarging or extending the storage capacity of a warehouse. Clear? That is what? Increasing the size. And increasing usefulness. It means what? It means improving the efficiency or the useful life of the asset. Clear? For example, installing advanced technology in an old machine to reduce wastage and making it more efficient. Clear? Or replacing the engine of a truck to make it run for another 5 to 6 years. We are going to replace the engine of a truck to make it run for another 5 to 6 years. That is what? Increasing usefulness. So in all these cases, the benefit to the business is future oriented, right? That is increasing the asset's capacity, size or usefulness. In all these cases, the benefit to the business is what? That is future oriented. So such expenditure means future oriented expenditure that is treated as capital expenditure. And what is the treatment? Here we need to add it to the assets value. That capital expenditure that is added to the assets value. Clear? So let's see the rule for addition or extension, how to treat in accounting. See, if the expenditure increases the future benefit of the asset, for example, increasing the production capacity, extending useful life or making the asset more efficient, that is considered as capital expenditure. This one we have already discussed, right? And so in this case, the amount is added to the asset account. The amount that is added to the asset account and depreciation will be charged on the new total. Clear? In this case, the amount is added to the asset account and depreciation will be charged on the new total. Here I will explain this point how to treat in accounting through one example. Before that, let's see the repair or maintenance. repair or maintenance. Clear? This is the extra spending can be of two types, right? Here first one is addition or extension. In that second one is repair or maintenance. First we will discuss repairs or maintenance. After that I will give the example for addition or extension. How to treat in accounting. Clear? So repairs or maintenance, it means what? Here it means just keeping the asset in working condition. Just keeping the asset in working condition means, it means what? It is not future oriented, repairs or maintenance. Just keeping the asset in working condition. So it is a revenue expenditure, not a capital expenditure. If it is future oriented, then it is capital expenditure. But this repair or maintenance, it is not future oriented. It means just keeping the asset in working condition. So it is a revenue expenditure. And what is the treatment? Debited to the profit and loss account, not added to the asset cost. Not added to the asset cost. But in addition or extension, we have to add to the asset cost because that is a capital expenditure. But in revenue expenditure, first we need to debit it to the profit and loss account and not added to the asset cost. Clear? So now let's see the example. See here. 1 minute. Yeah. See, a company, it has a machine worth rupees 2 lakh. Company has a machine worth rupees 2 lakh. Clear? Rupees 2 lakh. So after 3 years, company spends rupees 50,000 to add a new part that increases its production capacity. Clear? So company has a machine worth rupees 2 lakh. So after 3 years, what company will do? So the company spends, after 3 years, company spends rupees 50,000 to add a new plant that increases its production capacity. Increases its production capacity. Clear? Till here it is clear, right? So here the rupees 50,000 is not an expense. It is not an expense because this rupees 50,000, it is a future oriented because it is going to increase the production capacity, right? So this rupees 50,000, after 3 years they spent rupees 50,000 for what? To add a new plant. So it increases its production capacity, means this is future oriented. This is not an expense. This is a capital expenditure. Right? So what we have to do? It is added to the machine account. So the new value of the machine is, new value of machine is how much? That is rupees 2 lakh plus rupees 50,000 equals to rupees 2 lakh 50,000. This is the value of the machine. And depreciation. What about depreciation? Depreciation will also be charged on rupees 2 lakh 50,000. Clear? Why we have added to the machine account? Because it is a future oriented and capital expenditure. And depreciation also charged on rupees 2 lakh 50,000. But suppose, remember, if the money spent, that is only for repairs. Just assume money spent that is only for repairs or normal servicing. It does not increase the future benefits, right? Here repairs and maintenance means what? Just keeping the asset in working condition. Just keeping the asset in working condition. So It does not increase the future benefits. In that case, it is treated as a revenue expenditure and is debited to profit and loss account. Clear? I hope this is clear to you all. Now, just you have to remember keeping it in working condition means what? Revenue expenditure and expense in profit and loss account. And improving or extending it. It means what? Capital expenditure add to the asset account. How much they spend, that is we have to add to the asset account. In our example, they spend rupees 50,000 after 3 years. So that 50,000 we need to add to the machines cost, that is rupees 2 lakh. Totally that is rupees 2 lakh 50,000. Clear? Suppose it is a revenue expenditure, then we have to expense in profit and loss account. And or improving or extending it, capital expenditure add to the asset account. That's it. Clear? So this is our last concept under depreciation, that is effect of any addition or extension to the existing asset. Clear? So I hope this concept is clear to you all. If you have any doubts, please leave a comment. Thank you.